Welcome back, guys. Yes, cash budgets, interpretation, and some calculations. What are we expected to calculate now? We are expected to calculate the payments to our creditors. Yes, so immediately you identify the amount, which is 160,000. Remember, we are using fixed base stock. So if it's fixed base stock and your cost of sales is given to you, then that is the figure. Now, one of the provisos was that we are buying 65% of our stock on credit. Okay, so immediately you multiply that figure by 65% and it gives you a figure of 104,000 Rand. Now, take the 104,000 and a very, very important consideration is this one here. Creditors are paid, how? In full, in the month following the month of purchase, in order to qualify for a 5% discount. That's it. So take that into consideration when you are doing your calculation. Take your cost of sales figure, because that's what you are buying, multiply it by 65%. Why? That's the credit component. You are buying for cash and on credit. So credit was 65%. Now, take 65%, calculate. That's what I bought on credit. What do I now do? Now I say, fine. Take the 104,000, which I calculated, which was my credit purchase. Now, be careful when you're doing this calculation. When you are paying your creditor, you are entitled to a 5% discount. And in other words, what amount are you going to be paying your creditor? Listen carefully to what I'm doing now. The 100% is what you are owing. You are going to receive a 5% discount. Got that? So therefore, 100 minus 5 is equal to 95%. In other words, you're going to settle that debt by paying 95% of the amount that is due. And therefore, you take the 104,000 times 95%, and that's the amount that you will be paying your creditor. So guys, to recap, number one, calculate your credit portion of the amount that you are buying. Step number two, look to see if there are any discounts. And if there are discounts, then take the percentage of the discount, subtract it from the 100%. For example, if there was a 3% discount, it would be 100 minus 3, and you would work on 97%. Please make sure you are able to do this. Calculate the bank balance of Smart Store at the end of November. Very simple. From your information, take the figure that is given to you. Right. If you look at your cash budget, you can see that there was a surplus of that amount. Right. And from the previous month, there was an overdraft. Okay. The surplus minus, this was an overdraft. The 7795 was an overdraft. So you have to subtract it from your surplus. Notice the operation, it's a subtraction. You also can use a bracket to indicate that you are subtracting, and that's the amount of your bank balance. Refer to the item fixed deposit as shown in the receipt section of your cash budget. Explain what is expected to happen with regards to the fixed deposit on the 1st of November. You can see there's my fixed deposit, right? Something is happening here. What is happening? A fixed deposit of 20,000 Rand will mature on the 1st of November. How do we know that, guys? Please make sure when you're looking at your cash budget, you can see that in the month prior to it, there's my fixed deposit. Right? Notice in October, nothing appears there. Absolutely nothing. Whereas in November, you find an amount of 20,000 Rand. What does this indicate to you? It indicates to you that on a fixed deposit of 20,000 Rand will mature on the 1st of November. The money will be deposited into the business's bank account, and therefore you are expecting to receive that money. What is a cash budget? A cash budget is a forecast of future receipts and payments. Clearly identify that this is what a cash budget is all about. Well guys, we're moving along quite nicely with regards to the cash budget, but I'm sure you want to know more, and if that's the case, then you have to stay tuned to Matrix Uploaded with you in a jiffy.